Assalamu alaikum warahmatullahi wabarakatuh. Let me introduce myself. My name is Dadan Firmansyah, with NPM 23,411,076, from the Management 23X class. Today, I will be presenting on the subject of financial management with the title, Institution. Internal financing business activities. 1. Definition of financing institutions. A financing institution is an entity that provides funds or capital for various business needs. They play an important role in supporting economic activities by supplying the financial resources required by companies to operate and grow. 2. Types of financing institutions. Banks provide various financial products, including loans, savings, and investment services. Banks typically offer both short-term and long-term loans with varying interest rates. Finance companies focus on specific types of financing, such as leasing and consumer financing. They usually provide alternatives for companies that cannot obtain financing from banks. Venture capital provides funds for startups or new companies with high growth potential. In return, they typically take equity or shares in the company. Microfinance institutions offer financing services for small and micro businesses, particularly in areas underserved by banks. They often provide loans with more flexible terms. Crowdfunding platforms that allow individuals or groups to raise funds from a wide audience. This modern alternative is becoming increasingly popular for companies to obtain capital. 3. Functions and benefits of financing institutions. Source of financing. Financing institutions provide access for companies to obtain the necessary capital, whether for day-to-day operations or development projects. Risk diversification. By using financing institutions, companies can spread financial risks, reduce debt burdens, and avoid dependence on a single funding source. Provision of financial services. In addition to loans, these institutions also offer various services such as leasing, factoring, and insurance, aiding companies in asset and risk management. Access to networks. Financing institutions often have extensive networks that can help companies establish business partnerships, find new customers, or expand their markets. Guidance and consulting. Many financing institutions provide additional support in the form of consulting to help companies plan business strategies and manage finances more effectively. 4. Financing process. The financing process typically includes proposal submission. Companies submit a proposal or application for financing, including financial information and a business plan. Credit analysis. The financing institution conducts an analysis to assess the risks and viability of the company, including reviewing credit history and financial conditions. Loan provision. If approved, the institution will provide funds according to the agreed terms, including interest rates and repayment periods. Monitoring. Financing institutions often monitor the use of funds and the performance of the company to ensure that the funds are used effectively. 5. Challenges and risks. Credit risk. Financing institutions face the risk that borrowers may not be able to repay loans, which can impact their financial health. Regulation. Financing institutions are regulated by the government and must comply with various regulations that can affect their operations. Market competition. With numerous options available, financing institutions must compete to offer attractive products that meet customer needs. 6. Conclusion. Financing institutions play a crucial role in supporting business activities and economic growth. By providing various forms of financing and financial services, they help companies achieve their goals and enhance their competitiveness in the market. The existence of diverse financing institutions allows companies of all sizes to find solutions that meet their specific needs.